How to short strangles for a living. Hey guys, this is Mehdi at Choosing Options. Today we're going to talk about how to short options, specifically strangles, which means shorting a call and a put at the same time successfully. So successfully, that you can do it for a living. I break it down into two different sections. One would be to, first of all, something that nobody talks about, and that is how to find stocks or ETFs or indices to trade, suitable to trade. And then the second part would be how to uh, sell options on it. Okay, now the first part, as you can see, I scanned the whole market. Um, this would be the price column. Price change, volume, and this is the daily standard deviation of the stock. And most importantly, the IV, implied volatility percentile. Next would be the historical volatility and IV, implied volatility. So IV minus HV, and that's the result. 52 weeks range of its own range of every stock. Then we're looking at the actual implied volatility, then the 30-day historical volatility, then the 2 weeks and 1 week historical volatility. Now, here's how we're going to use all these numbers. After I do the scan, I sort everything by IV percentile. The higher the number, the better off you are. It goes all the way down to make sure spider is in there. So spiders is around 30%. Today they're trading about 30% of its own range. So I won't go anywhere below 30. I go like 10 to 15% above this. So like 45% and higher would be a good trade. That's the first most important thing. Second thing is daily standard deviation. Well, I should cover this last, but if it's higher than 1, I make a note of the stock and then trade it, follow the next couple of days, and I trade it then. If it's higher than 1, I'm lower than -1, I won't trade the stock. Something's happening, it's going out of its range, so I'll wait a day or two before I trade. So that's for this column, standard deviation. Now, we talked about this. Now, the HV historical and implied volatilities are important, and that is, I look at the chart of the stock, and I want to make sure this number is positive. That is, um, implied volatility should be consistently higher than historical volatility. That would be a sign of stability. So that means the stock is not going to fluctuate much during these next, I don't know, 2-3 weeks. So that's one very important thing to look for. The next one would be 52 weeks price range of its own price range, by the way. If it's higher than 95 or lower than 5, I won't trade the stock. So all of these are good. I already weeded those ones out, so you're not going to see those anything above 95 or less than 5 in here. Okay, these two we talk about in a minute. Implied volatility is this guy, and then 30-day, 2 weeks, 1 week. So if 30 days is higher than 2 weeks, and 2 weeks is higher than 1 week, it'll trigger a 1 in this column. If it's the other way around, it'll trigger a 1 in this column. So what does that mean? Like for instance, in this line, 24, 15, 40, 15, 16. So that means historical volatility as the time is gone is sloping down. So you'll trigger a 1 here. And all these numbers are less than this number, which is implied volatility. So that's a sign of a good trade to me. That would be a good trade. Actually, I did this trade yesterday. We talk about that in a minute. So basically, how many things did we cover? Standard deviation, implied volatility, historical minus implied minus historical, that's 3, 52 weeks range, this historical volatility sloping down, like 5 points that we consider. But there are other factors like earnings. If I average about 27 days, so if if earnings are coming up soon, if it's less than 35 days, I won't trade the stock. Sometime, I mean, 30 days is the max I go. I mean, I should say minimum. 35 days is a good, I mean, anything below 35 days, I won't trade it. What else is there? That would cover most of it. So this is how you find options. So this line, this thing right here is good. The next one is this EWJ. Now, when you trade all of these, I encourage you to do all of this in your paper account so you get a hang of this. You'll notice there are some stocks, like for instance, this guy, EWJ. It's a pretty good, it falls into all the categories that I was telling you about, but I rarely trade this one. And the reason is being it gaps a lot. It tends to jump around. It trades, overnight as well. Like I think it's a Japanese market, EWJ. So after a while, you get a hang of this. The stocks that jump around, you just don't trade. Don't trade them. Don't. It's not worth the risk. So this is one of them. If you trade this, watch it very carefully every day because it just gaps around a lot. So the next one is this guy, but the only thing about this is volume. See, the volume is too low. So another thing I should have said, the gap between ask and bid. You want it pretty tight. You want a liquid stock. So this is not gonna do it. I don't know why it came up in the scan. What else? This too. I think this one gaps a lot too. But overall, I think this one is a good trade as well. EFA. These are all ETFs, by the way. Dow Jones Industrial. This is a good trade. FEZ. That's a good trade too. But another thing, let me show you for earnings. There's a website called Earning Whisperer. So basically, you pick any symbol. Let's say, for instance, Intel, INTC. It says the next earning is on the 25th, October 25th. So this is very accurate. if the stock is in range, you should see a check mark with the date. So that's how you can check and see how far. This is a pretty, good website. Take a note of this and, check for earnings with this website. Um, Now that we talked about how to find them, uh, we want to talk about how to place the trade. You can do this with puts, calls, or combination, which is called strangle. Like yesterday, I did this trade. At that time, I think IB was 76, was even better. Today, it went down to 69, which is still okay. So basically, I went on, put a trade for puts and calls, put at 55. Um, so yeah, you want to trade only monthlies. Stay away from weeklies because you get better. They're more liquid on the monthlies, unless you're doing indices like Dow Jones we talked about earlier. Where was it? Like this guy and spiders or triple Qs. Those guys are pretty liquid, so you can do any, weeklies. But for stocks and ETFs, I just do monthlies. The range I go anywhere from 30 days to 65 days at the very farthest out. The actual depreciation, the most depreciation starts from 45 days, mm, coming down 30, and it increases. Um, so in this case, I picked September. On the puts, I went down to 55. On the calls, I went to 70. So 55. I collected about $1.11 per contract. I did about 3 contracts. Um, the probability of profit on this, by the way, on these scans, if you subscribe or shoot me an email, I can send you these daily scans. As frequent as you like once a day, a couple of times a week, or whatever. Um, how do you calculate the probabilities? Well, your brokerage firm should give you the probabilities on every options. Like I go probability of in the money of 10 on each side. If they don't, they definitely do give you the Greeks, which you look for delta of 10 on each side should be close enough to probability of in the money of 10. So in this case, it's that's what I did, 55 and 70. That was closest to delta 10 on each side. I mean 10 and minus 10 on the put side. In this case, we have like 50 days to go, and as I put it closing trade right away the same day. I put it closing of 20%. Let's see here. Here is a trade. See, I'm buying it back. I sold it about, where is it, 111 minus the commissions is about 110 roughly. Buying it back at 39 cents. If it goes against me to 211, I'm gonna get out of it. We did the earlier videos on Macy's, which I'm not doing too well. I mean, it's okay. I'm still within range. Um, I think these are the earlier videos. So I'm waiting for the results. As soon as they close out. Yeah, the other day I did a video on this one, MYL, which we made about 65% in about 25 days. So A2, which by the end of this month, we should see the results. I'll do another video down the road and show you. Just just to let you know, you always want to take the emotions and fears out um, right away, like I did here. Put in the order to close this range, whatever you feel comfortable with, and do these trades in your paper account until you get a hang of this. After a while, you get, you find out, you'll know what to do. So yeah, by the end of the month, I'll probably do another video. I will do whether I win or lose on this ETFC, and you'll see how this works. If you look up here, these are earlier videos that I put on, all the trades. We've lost one during past. I've been doing these videos for like 2-3 months now, 2.5 maybe. Disney was the only one that we lost. And it's in these videos, my playlist here on all the trades that I put on. So go through these videos. Maybe my first video is about how to find options. My second video is about how to do strangles and also do straddles, how to buy them as insurance purpose. I did another video on that. If you go to my channel, subscribe and go through those videos, you learn a lot. Just remember, do a lot of trades, do them all in your paper account. What else you want? That's about it, guys. So happy trading, trade a lot. Let me know if I need to cover something, or if I'm doing something really, you know, not proper, I guess, whatever I should say. Let me know. I need your feedback. Thank you, guys. Have a nice weekend. Peace out.